Certain events are unavoidable. Central banks and the propaganda arm of the government, also known as the mainstream media, attempt to keep the public in the dark and are unwilling to actually create a stable system. The booms and busts are not a natural event the way we see them today. In general, they should be mild instances, not capable of paradigm shifts or catastrophic effects. Instead, the fear of a potential crisis is treated as a cataclysmic event, and the potential danger is unparalleled. You came here for the truth, so let me unveil that for you. Today we're going to look at what's happening in the financial system. I'll show you the stock market, the bond market. I really want to get into Argentina as well. There's a lot going on there. I'll show you what's happening right now, as well as giving you some historical context, because it happens to mirror exactly what we're seeing today, and that is not a good thing. Take a look at what happened in the markets today, all in the green. The Dow Jones, for instance, up 258 points. So obviously there was some really good news that came out. We probably had a trade deal that was signed, maybe at least a meeting that's been set up, or the whole yield curve inversion has reversed and everything looks just fine in the bond market. Maybe we had some sort of special arrangement that's taking place that looks like they're getting rid of some of the debt that we're seeing with the corporations. No, maybe it's something to do with the national debt. No. In fact, there was absolutely no positive news at all today, and yet the market went up 258 points. Thank you very much to all the computer algorithms out there who were buying this up, because apparently there was no good reason for it to actually be trading in the positive. It could have been flat, didn't have to be negative necessarily, but the fact that the Dow Jones is up 250 points shows you the manipulation that we are seeing for this entire bull market. New recession warning, the rich aren't spending. This is an interesting statistic. A sudden pullback in spending among the wealthy could cascade down to the rest of the economy and create a further drag on growth. High-end real estate is having its worst year since the financial crisis. Luxury retailers are struggling, while discounters like Walmart and Target thrive. By the way, we saw this happening leading up to the financial crisis. In the first half of 2019, art auction sales were down for the first time in years. All of this here just shows you that it is adding up to all of the concerns, all of the warnings, everything that's been piling up at this time. It's not just one or two indicators. We are seeing this on all different levels. It's not just because the US and China aren't getting along. Business is still happening. Yes, we have tariffs. Yes, we have tensions. Of course, there are things that are happening today, but you can't ignore the facts, and that is that there is a slowdown taking place. I've shown you Google trends before. Here's another one. Main Street Google's Dow Jones when they are worried about stock market volatility. The concern for investors is that stock market volatility and more chatter about recession indicators flashing warning signs could lead to make US consumers more cautious headed into the 2019 holiday season. And if you look at the actual Google Trends information going back into 2004, we are at a level it has never been before. Now, like I've said in previous instances, people are searching more things in general. People are becoming more aware. We are seeing social media pushing things. The news media pushes other things. So of course, over time, we would probably see an increase in something like this anyway. I just wanted to show you that right now, in the recent past, we have witnessed a spike. When I went in closer, I saw that actually this declined from its peak. So it's not at the absolute highest point. But when we've had these market dips that occurred back in the fourth quarter of 2018, back around January to February 2018, these had spiked upward. So I thought it was interesting to see how the same thing was happening now because of people's concerns. This is something that, of course, is very telling because it shows you what people are looking into. Trends.google.com. I thought this was funny here because we've been looking at the yield curve inversion and how important it is, not because it actually creates a recession, not because as soon as the yield curve inversion occurs, the very next day, the stock market crashes and that's it, it's over. I've talked about that so many times before. I know all of you watching know that very thing. However, we have to see this type of information in the media consistently making its appearance. Yield inversion isn't isn't just a switch for recession and may not be a signal at all this time. That's right, this time is different. How many times have we heard this exact line? That this occurs time and time again, a recession follows, but as we are in that zone, there are people out there telling you, you don't have to worry, this reason, that reason, and this reason are why you shouldn't be concerned, therefore keep your money invested. Look, all of these people that are telling you don't worry about it, they personally have a lot of money on the line, or their job relies on them to make sure that you keep your money in, that you don't go to cash, that you stay in investments that make them money, that generate fees when they're making money on the trades, and of course, all down the line. You're never going to hear Warren Buffett say, now is the time to sell your stocks. It's simply not going to happen. Jerome Powell, not going to tell you that. They're always going to be very surprised when it occurs, okay? So just remember all of the telltale signs. This right here is the 2-year, 10-year. You can see the contraction. You can see it moving into this inverted state that is completely abnormal when you think about it. Why in the world would a longer dated bond not give you more yield? It is completely crazy, but that's what happens when you have central bank intervention. It breaks the system. The 3-month, 10-year, this is something that is very telling. In fact, we should be watching this extremely closely. Take a look at this. David Rosenberg, we now have had 3 months of a 3-month, 10-year yield curve inversion. The track record this has had in predicting recessions, 100%. Every time this occurs, 100% of the time we have a recession. Does that necessarily mean the recession's tomorrow, next week, next month? No, that's not what it tells you. All it means is that in the near future, at some point, there's going to be a recession. That could happen anywhere between, let's say, a month from now or 2 years from now. So that doesn't necessarily make you want to just go out there and sell everything you have. But what it does do is supposed to make everybody more cautious, and actually doing so would soften the blow out there. If people would start to use less margin, if they would get rid of some of their debt, if they would start paying down all their debt in the personal, corporate, and so on, you would have a much better situation. But that isn't the case. People risk to the absolute maximum, and we always have a worse crisis than anybody had ever predicted. U.S. yield curve steepens as Stevie Boy Munchkin endorses longer-term bonds. What are they talking about here? Well, not so good. They're pulling in Argentina, and they want to actually create the 50-year and 100-year bonds. The Treasury Department revealed it was yet again mulling 50 and 100-year bonds, which would let the government lock in historically low rates for longer. If the conditions are right, then I would anticipate we'll take advantage of long-term borrowing and execute on that. It's not necessarily that they are going to go ahead with this, but they're certainly looking into it, and it wouldn't surprise me at all. Do you want to give your money to anybody for 50 or 100 years? Yes, yes, yes. I realize that many investors don't keep it to maturity, but the point is there. Do you want to keep your money with a government for 50 to 100 years? It is absolute insanity, and yet we are seeing this happening more and more. This is not the only country, if you look around the world, that is doing this. Argentina, I'm referring to, but we have others doing the same thing. We've seen them in the past. Now, speaking of Argentina, if you look at what has occurred over the past few years, we see a maximum devaluation of the currency. We have watched all of their intervention that has taken place by their own forces as well as the IMF. This is a cycle that seems to be repeating over and over again. I'm going to give you the download on Argentina right now. We're going to look at the current status. I'm going to show you history. I got a lot to cover. This video is going on very long. If you want to see the info about Argentina, I get into everything. Go to the end of this video. I will put the link there. I'm going to end the video there. If you found it informative, hit that like button. Thank you very much. If you want to know how to actually bring in income for yourself, then you have to join what will soon be the biggest Amazon course on the internet. It is free. The AmazonGPS.com. I have a step-by-step process to teach you how to sell, how to make money, how to make a business out of Amazon. There's a link in the description. Check it out. If you want the financial education you were not taught in school, these two books have everything you need. All the details about the foundation history, the asset classes, how to make money. There's so much more in here. Click on the link in the description to take you over there where you can flip through the pages of the books for yourself. If you want the audiobook, that's available at themoneygps.com. In this video here, I get into everything you need to know about Argentina, talking about what's happening now, giving you the historical context, a lot of data. Click on it and I will see you over there.